Taiwan Semiconductor is one of the best managed companies and important companies in the world. And there is not, and I think you'll be able to say the same thing 5 or 10 or 20 years from now. I don't like its location, and I've reevaluated
Hi everyone,
that.
welcome to Clone Compounding, where our mission is to learn from others in order to achieve financial independence.
Today, we've got a fascinating topic to discuss. Warren Buffett's investment journey with Taiwan Semiconductor Manufacturing Company, or TSMC. As one of the most legendary investors of all time, Buffett's decisions are closely watched by investors worldwide. In this video, we'll delve into the top 3 reasons why Warren Buffett initially bought, and then later sold, TSMC shares, all while highlighting his iconic value investing style. TSMC probably remains Mr. Buffett's shortest holding period company, as he bought and sold within a 3-6-month period. But before we dive in, make sure to hit that subscribe button and ring the notification bell so you won't miss any of our future videos. The purchase of TSMC shares. Let's kick things off by looking at the first part of our story, Warren Buffett's decision to buy TSMC shares. Back in Q3 2022, Warren Buffett's Berkshire Hathaway made headlines by acquiring a whopping $5 billion worth of TSMC shares. So, what was the driving force behind this investment? Well, it all comes down to Warren Buffett's value investing principles. Reason number 1: strong fundamentals and competitive advantage. TSMC is a semiconductor manufacturing giant with a reputation for innovation and technological prowess. They're essentially the go-to company for producing the latest, cutting-edge chips for tech giants like Apple and Nvidia. This technological moat and dominant position in their industry aligned perfectly with Buffett's value investing philosophy. According to Warren Buffett, in business, I look for economic castles protected by unbreachable moats. Looking at TSMC's fundamentals, we can see that the company's revenue has gone up by 4x in the last 10 years. In the last 3 years, revenue has grown at 30% CAGR. In the same 10-year period, the net income has gone up by over 6x. In the last 3 years, the net income has grown by 40% CAGR. Moreover, over the last 10 years, the free cash flow has almost grown by 10x. So, the company has very strong fundamentals. In addition to TSMC's fundamentals, its technological moat in the semiconductor industry made it a compelling investment choice for Warren Buffett. It perfectly exemplified his first reason for buying shares, the presence of a strong competitive advantage. Reason number 2: valuation and margin of safety. One of the key pillars of Warren Buffett's value investing philosophy is the concept of margin of safety. Simply put, he looks for investments where the market price is significantly lower than the intrinsic value of the asset. In the case of TSMC, in Q3 2022, the stock was trading at around $400 billion in market capitalization. TSMC stock was dirt cheap in Q2 of 2022, at less than 13 times trailing 12-month earnings. With the entire semiconductor industry expecting a rally in sales, on the AI-driven boom, in the second half of 2023 and into 2024, TSMC's earnings could be headed much higher. This satisfies Buffett's buying a wonderful company at a fair price criteria. Buffett found this valuation to have enough margin of safety given the company's moat and its revenue and net income trajectory. TSMC had reached a highest market capitalization of around $650 billion in early 2021. But while that was during the COVID-related stimulus-driven market frenzy, Buffett did believe in the company's ability to continue generating strong free cash flows. The sale of TSMC shares. Now, let's fast forward a bit to the next chapter in our story, the sale of TSMC shares by Berkshire Hathaway. Later that year in Q4 2022, just a few months after buying the stock, Buffett shocked the investment world when he decided to part ways with his TSMC holdings. But, as always, there was a method to his madness. In interviews following the sale, Buffett shed light on his thought process, providing us with our third and final reason. Reason number 3. Adaptation to changing trends. Buffett acknowledged that the tech industry was rapidly evolving. With the rise of new technologies and changing market dynamics, the future of semiconductor manufacturing was becoming increasingly unpredictable. The primary reason for him selling the stock was geopolitical tensions. TSMC is considered a national treasure in Taiwan and supplies semiconductors to tech giants including Apple and Qualcomm. It mass produces the most advanced semiconductors in the world, components that are vital to the smooth running of everything from smartphones to washing machines. The company is perceived as being so valuable to the global economy, as well as to China, that it is sometimes even referred to as forming part of a silicon shield against a potential military invasion by Beijing. Buffett's decision to sell TSMC shares demonstrated his willingness to adapt to changing trends and not be overly attached to past investments. Buffett dislikes instability, and TSMC's location in Taiwan unsettles him. It's possible that Buffett changed his mind after the US CHIPS Act was passed in August 2022. After that, the US started dialing up its restrictions of advanced chips and chip manufacturing equipment to China. That, in turn, has led to rising China-US tensions. Buffett said he wants to find that wonderful business in the semiconductor industry like TSMC, but he wants to find it in the United States. By selling TSMC shares, Warren Buffett emphasized the importance of staying nimble and not getting caught in the trap of sunk cost fallacy. There you have it, folks, the top 3 reasons why Warren Buffett bought and later sold TSMC shares, all while staying true to his value investing style. Warren Buffett's investment journey with TSMC is a valuable lesson in the world of value investing. It reminds us that even the greatest investors must continuously assess their holdings, adapt to new realities, and prioritize capital preservation.
For now, that's it from us. Hope you enjoyed and learned from this video. Smash that like button and subscribe to receive more videos on memos and write-ups from top investors. Thanks for watching.